from the air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew, navigating through the markets, knowing what to do. Federal Reserves in control, making moves, keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Hater on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
Slower but still solid growth outlook. At the same time, surveys of households and businesses report dimming expectations and higher uncertainty about the outlook. Survey respondents point to the effects of the new federal policies, especially related to trade. We are closely watching this tension between the hard and the soft data. As the new policies and their likely economic effects become clearer, we will have a better sense of their implications for the economy and for monetary policy. Looking across many indicators, the labor market appears to be broadly in balance and not a significant source of inflationary pressure. This morning's jobs report showed the unemployment rate at 4.2% in March, still in the low range where it has held since early last year. Over the first quarter, payrolls grew by an average of 150,000 jobs per month. The combination of low layoffs, moderating job growth, and slowing labor force growth has kept the unemployment rate broadly stable. Turning to the other leg of our dual mandate, inflation has declined sharply from its pandemic highs of mid-2022. It has done so without the kind of painful rise in unemployment that has often accompanied periods of tight monetary policy that are needed to reduce inflation. More recently, progress toward our 2% inflation objective has slowed. Total PCE prices rose 2.5% over the 12 months ending in February. Core PCE prices, which exclude the volatile food and energy categories, rose 2.8%. Looking ahead, higher tariffs will be working their way through our economy and are likely to raise inflation in coming quarters. Reflecting this, both survey and market-based measures of near-term inflation expectations have moved up. By most measures, longer-term inflation expectations, those beyond just the next few years, remain well anchored and consistent with our 2% inflation goal. We remain committed to returning inflation sustainably to our 2% objective. Turning to monetary policy, we face a highly uncertain outlook with elevated risks of both higher unemployment and higher inflation. The new administration is in the process of implementing substantial policy changes in 4 distinct areas: trade, immigration, fiscal policy, and regulation. Our monetary policy stance is well positioned to deal with the risks and uncertainties we face as we gain a better understanding of the policy changes and their likely effects on the economy. It is not our role to comment on those policies. Rather, we make an assessment of their likely effects, observe the behavior of the economy, and set monetary policy in a way that best achieves our dual mandate goals. We have stressed that it will be very difficult to assess the likely economic effects of higher tariffs until there is greater certainty about the details, such as what will be tariffed, at what level, and for what duration, and the extent of any retaliation from our trading partners. While uncertainty remains elevated, it is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation. The size and duration of these effects remains uncertain. While tariffs are highly likely to generate at least a temporary rise in inflation, it's also possible that the effects could be more persistent. Avoiding that outcome would depend on keeping longer-term inflation expectations well anchored, on the size of the effects, and on how long it takes for them to pass through fully to prices. Our obligation is to keep longer-term inflation expectations well anchored and to make certain that a one-time increase in the price level does not become an ongoing inflation problem. We'll continue to carefully monitor the incoming data, the evolving outlook, and the balance of risks. We're well positioned to wait for greater clarity before considering any adjustments to our policy stance. It is too soon to say what will be the appropriate path for monetary policy. We understand the benefits of a solid economy where workers can find jobs and inflation is low and predictable. We also understand that elevated levels of unemployment or inflation can be damaging and painful for communities, families, and businesses. That is why we at the Fed will continue to do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Oh my God, sorry guys. This was not super announced. We got it just in time. I don't know what this feed is. Like, they're in a high school library. They're taking hits. You can't hear them. The audio is terrible.
Speaking with you, and I want to thank you for your time.
I feel like all we got is the subtitles.
Got it. I want to thank you for being here, and thank you for taking the time to speak with this group of business journalists. Also like to give a special thanks to Heather Long with the Washington Post, who helped make this event possible. So for starters, sir,
This is wild.
how's your week been?
Just fine, thank you.
Care to elaborate?
So far, so good.
Chair
What?
Powell, yes, thank you so much for being here and taking our questions. You were talking about the economy as being a very strong economy. You characterized inflation as coming down, employment as being very strong still. However, President Trump, earlier this week when asked about the market volatility we've been seeing, said the volatility was, quote, to be expected. This is a patient that was very sick. We inherited a terrible economy. A lot of voters did and do agree with that assessment, or at least in part. I'm wondering how you would respond to that assessment and the disconnect between the story of the data and the way a lot of people are feeling about the economy.
Sure. So let me just be clear at the start. I make it a practice not to respond to any elected officials' comments, so I don't want to be seen to be doing that. It's just not appropriate for me. But the situation, I think, is this, and people, when they're surveyed, they are unhappy about the economy. That seems to largely reflect the increase in the price level that happened when inflation was high, 2021, 22, and 23, largely. Inflation is now back down to much more normal levels. Unemployment is low. The economy has been growing, but people are still experiencing that high price level. In other words, prices don't go down. They know they're paying much more for the basic necessities of life, and they're right that they are, and they're not happy about it, and they're right not to be happy about it. So I think that accounts for the negative sentiment. We, of course, we're looking at inflation, which is the change in prices, and we're seeing that that has come down quite a bit, and that, you know, unemployment is actually low. It's sort of very close to measures of maximum employment, and the economy's growing. So all those statistics are good, but you know, the price increases of the past few years are weighing on people's budgets.
Yeah, that
So
hissing is
I'm
them.
from Milwaukee, and I've been talking to business leaders, executives, and consumers in our community, in our region, for the last few weeks, mostly before this week's news. Chairman, they're troubled and they're nervous. One
You can hear the
business owner
snakes
told me,
hissing.
if there's a hint of a recession, we're cooked. And he
That's
asked me to share
100%
that
them.
with you. What's your response?
Dude, all their mics are at different levels too.
So
I
guess I
driving
would
me
say,
nuts.
let's start with the fact that the incoming data right through this morning's employment report, which admittedly is from roughly a month ago, the week of March 12, they took the data in. It still shows us a solid economy. Unemployment's still low. I understand the uncertainty that's weighing on people. You ask about a recession. We don't make a probability forecast of how likely it is for there to be a recession, but many outside forecasters do, and many of them have raised the likelihood, albeit from very low levels. It's not something that anybody now is forecasting, or some people are starting to. And so there's not much more I can say about that. I realize that the uncertainty is high, and you know, what we've learned is that the tariffs are higher than anticipated, higher than almost all forecasters predicted. We still don't know where that comes to rest, though, and we're just going to have to see that through.
At a congressional hearing last year, one of the U.S. representatives said that you were pretty boring, and you thanked him and said that you considered that a very high compliment. And in fact, I feel like it's one of the roles of the Federal Reserve, especially since the housing crisis, to be kind of a ballast, especially in the face of the volatility of the markets and the dramatics that we can experience with the economy. Very steady, no surprises, very reliable. In a moment like this, which also has a lot of drama and unpredictability, but it is not necessarily from an economic crisis, it's by design, it's political. How do you see your role in this moment?
So I think all of the values that you touched on are in fact the values that we try to live by. You know, we're driven by, you know, analysis and careful thought and discussion and debate and the merits of things. We try to stay as far as we can from the political process. We don't look at political cycles or things like that. So, and I think people expect that from us. They expect us to tell the truth, and that's what we're going to do. But at the same time, we don't want to be part of the broader political discussion about the wisdom of policies that are not assigned to us. We're not responsible for trade policy, immigration policy, fiscal policy. So we don't comment on those. Decisions are made by others, and what we do is we use our tools to try to achieve the goals that Congress assigned us, which is maximum employment and price stability. So I like to think that over time we're a source of calm, rational analysis and also of stability. That's really what the business that we're in is, providing financial and macroeconomic stability to the public. That's really our purpose.
This chart is the best hopium.
How can businesses and individuals and the Fed make plans for the future when so much is being dictated by the actions of a single person?
That is a great question, a little loaded.
As the consoler in chief on economic matters?
A little loaded, but he's right.
Take a step back. What's happening is, as I mentioned, the new administration is making, you know, significant policy changes in trade, immigration, fiscal policy, and regulation. And you're still just a couple of months into the administration, and that process will take place. And at a certain point, the new policies will be on the table. They will be having the effects they're going to have on the economy, and uncertainty will decline. Right now, there's a lot of uncertainty about where all that's going to sort out, the forms it will take, and what the economic effects will be. If you fast forward a year from now, the uncertainty should be much lower. The actual effects of the policies should then be pretty manifest and clear. So I think I understand why it just is highly uncertain, both what the policies will turn out to be, exactly what they'll turn out to be, and also what their effects will be in the near term. We just have to go through that process, and it is just kind of a manifestation of our election cycle and a new administration coming in with new policies.
I mean, given all of the change happening and the fact that we are in a period where things have not settled in yet, and that the Federal Reserve and you as chair are very projection, data-driven, policy-driven, how do you handle a moment like now? I mean, can you tweak your plans and projections? Do you just do you have to reset them?
So, what we've had since in the last few months is, from the staff, has been a placeholder. Rather, they wouldn't call it a forecast because it's so uncertain. They call it a placeholder. And that's kind of how we've been thinking about it. So it's a good time to take a step back and clarify. That's why it's just too soon to say what the appropriate monetary policy response will be to these new policies. It is just too soon to say. We can't say with any confidence today. So that's what we're doing. We've taken a step back, and we're watching to see what the policies turn out to be and the ways in which they will affect the economy, and then we'll be able to act. Fortunately, our policy stance is in a good place for us to do that. We're probably moderately restrictive, let's say. So it's not really tight policy, but it's which is appropriate since inflation is a bit above target. So we think we're well positioned to address whatever may come. And in the meantime, I'd say we're waiting for greater clarity before we consider adjustments.
Business owners in Wisconsin have told me that they can't make their plans. They want to expand. They want to build a new facility. They want to hire or do whatever the future calls for. They say, we're trying to look around the corner. We're not even sure where the corner is, and we're not even sure what's around the corner. Sounds like they're in the same position as you are a little bit.
No, we hear the same thing. Of course, we have an incredible network of contacts with businesses and also universities, nonprofits, all different sectors through the reserve banks and also through the Board of Governors. And that's what we hear. But again, it's a process. We're going through it, and I think we will know when we know what the policies are exactly and what their implications will be for the economy. That will all become clear, and I think that'll be a time when people can make decisions. In the meantime, though, I get it. We're hearing that a lot from people, and we are kind of in the same place, which is waiting for clarity about what our policy path should be. It might be months away.
I can't find the Wall
We'll
Street
have to
Journal
see.
link, and somebody sent it in Discord.
As you're talking about placeholders right now and having something in the place when there's so much that we don't know, it does occur to me that this is not the first economic shock that you have steered the markets and the economy through. Obviously, there was COVID almost exactly 5 years ago. It seems similar in certain ways with a lot of uncertainty, a lot of shock, also potential disruptions to prices and to supply, which is very much in the Federal Reserve's wheelhouse. I mean, from where you sit, can Liberation Day be compared to kind of the economic effects of COVID? Are they totally different, somewhat related?
You may have found a better feed here. Hold up. Watch your speakers.
I think each situation is different.
It's a little better.
There was COVID. There was also then, in the response to COVID, then there was high inflation, and then there was soft landing, and then and now we have new administration and changes in policies, and every situation, it kind of rhymes, but it's not exactly the same thing. And so in this situation, what we face is what I mentioned in my remarks is you actually have risks for higher unemployment and higher inflation, and that's difficult for a central bank because our tools, which consist of interest rates, either slow down or speed up the economy over time, and higher unemployment would call for speeding up the economy, and higher inflation would call for slowing it down. So you can be in a situation, if we find ourselves in that situation, we look at how far each of the two variables is from its goal, and we ask ourselves, how long would it take to get back? And we weigh those things and make a decision about what to do. But there's no question that's a different situation, very difficult situation. When we faced high inflation, it was painful for the country, painful for the people that we serve, but we knew what policy needed to be. We knew we needed to raise rates quite a bit. During the pandemic, we knew what we needed to do. It was very clear the direction that we needed to take with force, and we did.
It's almost a situation potentially where the dual mandate is at odds with itself.
The two goals are, as we say, in tension, or they may be. I'd say that's not what we're seeing right now, but it's the effects at the margin right now would be for higher inflation and perhaps higher unemployment, but that's a marginal effect. I would say you're not in a situation like we were in the 1970s where the two goals were really both pulling in opposite directions and required. It's just very hard for a central bank to be the answer to a situation like that. But that's not the situation we're really in today.
One of the questions from the audience that we had is, if unemployment takes off and inflation takes off, which lever do you go for? Which lever what do you do?
So we actually have we have a document called our consensus statement, or the longer version is Statement on Longer Run Goals and Monetary Policy Strategy. And the 6th paragraph of that actually contemplates when the two goals are in tension. And what it says is, think about how far each variable is from its goal, and think about how long it would take for each to get back. So in a way, it's an equation. You're comparing two quantities which each have two variables. And then you say, you look at that and you think, what do we need to do? And typically this doesn't happen very often, but if one of them is further away, then you would focus on that one. In the case of high inflation, they actually both pointed in the same direction. The labor market was overheated and inflation was very high. So both of those called for tight monetary policy. This could be different, but again, we're not actually facing that today.
I feel like there's another tension inherent in your job, which is that you're looking at the macro economy, at the global economy really, and the U.S. places in it, but also the data you're looking at is very profoundly human, as Jim has been pointing out. Jobs, I think, and prices are probably the two most human pieces of data, and certainly in our day-to-day experience, probably the things that loom the largest. How do you reconcile those two things when you're looking at the data, like both the global markets and knowing that the data represents a lot of lives and jobs and egg prices and things like that?
Egg
So I think at the Fed, we always keep a focus on the people that we serve, and we know and are very conscious daily that the things that we do have a real effect on people's lives. We know that, and it really does focus the mind. And I think if you talk to people at the Fed, there's a very strong commitment to serving the public as well as we possibly can. Economic events are just very, very unpredictable at times, and there are shocks that you can't see coming. But nonetheless, our job is to, whatever happens, use our tools to bring the economy back to stability, back to price stability, back to maximum employment. And that's what we do. But you're right. We try to keep everybody in the room with us when we're thinking about what to do.
So in response to the last round of tariffs, Harley-Davidson, which is based in Milwaukee, moved some production to Thailand. Welcome to. It might be whipsawed again by the new tariffs. It could be really devastating for sales, for employment, for the future of that company. But a lot of companies are in that same position. And what do you say to companies like Harley-Davidson and their workers?
So it just isn't, I really want to stick to our knitting. I mean, we have this great thing called our independence of monetary policy, and that's critical for us to be able to do our job. But for us to keep that independence, we need to not succumb to the temptation to want to be a player on issues that are not assigned to us. And trade policy is one of those. There are many, many issues that people love to try to pull us in on, almost every issue, really.
Yep.
And we just need to stick to our knitting, not get pulled into those things. And so trade policy is a classic one. Energy policy is another. Climate change, many immigration is not really, although all of those things have economic implications.
Of course,
and
everything
it
does.
gets argued that way. But if we treated those as our job, the case for our independence would disappear. So I really can't comment on, we hear the same stories like that, but honestly, the policymakers who are charged with that, they're probably hearing the same stories too, and they're reaching a judgment about what's in the best interest of the country in the long run. That's what they are doing, I guess, and that's, so it's not for us to comment on that.
What happens inside the Fed at a moment like right now, when there's so much change and quite a bit of uncertainty? When you're watching things unfold, what does that look like, practically speaking? What are people doing inside the building?
So I'm very proud to work with the people I work with. I can tell you that in times like this, or times like the pandemic, where the global financial markets were shutting down, the global economy was shutting down, people step forward and they say, "We've got this." These are career people who were here for the global financial crisis. They've got 25 years, 35 years of experience with crises, and they step forward and it's just incredible what they can do and how good they are. It's a great honor to work with them. So right now isn't that situation. We have the situation we have, so our trade people and our inflation people and our macroeconomists are all working hard to kind of digest the news of this week and try to filter that into the forecast that they'll make. And policymakers are doing very much the same thing, and we're reading everything we can about what's happening and lots of outside analysis too. We don't have an FOMC meeting until May 6 and 7, so that's really a process that lasts several weeks, and we're not quite at that stage yet. But we're kind of thinking ahead to that and working through all of that. I will say though, it feels like we don't need to be in a hurry. It feels like we have time
Really?
to. Yes, it feels like we don't. No, it's like I said, you have inflation is going to be moving up and growth is going to be slowing, but it isn't really, to me, it's not clear at this time what the appropriate path for monetary policy will be. And we're going to need to wait and see how this plays out before we can start to make those adjustments.
Question from the audience. One of our 𝐒𝐴𝐵𝐢 members is, are you in contact with other central bankers in other countries at a time like this?
Yes, pretty frequently. Absolutely. And the same was true during the other crises I've been through. Not only that, though, we do meet very regularly. the IMF World Bank meetings here in Washington twice a year. We go to Basel multiple times a year to meet. That's all central bankers. And there are also G20 meetings, G7 meetings where the central bankers are there. So we're kind of regularly meeting and talking. And when we're not doing that, we're also texting each other. And
Is there a group chat?
I'm not at liberty to say. No.
It's not funny.
No, there's not.
It's not a funny joke. They just laugh at everything.
Central bankers this week?
It's like a laugh track.
Recently, yeah, I didn't want to get too specific about this, but yes, I have.
What's their sentiment? Can you characterize that?
I'd rather, again, I don't comment on what my
rather
international colleagues say, or it's not appropriate. But we're talking about events, we're talking about the implications for the economy. We're discussing what we're hearing from markets and from business people and for from the elected governments too. It's all the things you would expect us to be talking about on a regular basis. It's one of the best things about this role is that the central banks have a lot, we're all non-political. So we think about things in quite similar ways, and they're real bonds. We're not lobbying each other ever on policy. It's just never. That's just not a thing, because we do our policy here, they do their policy there, but we develop really, really good relationships and bonds with them, and it's one of the real pleasures and benefits being able to talk about this, just not only with the great people at the Fed, but also with the leaders around the world.
I mean, it's interesting because it is a job of enormous responsibility and power, but it's also a job. How would you characterize the job of Fed chair? Like, how is it as a job?
Ow.
Honestly, that's what it is. I really feel just like another person doing that job.
Really?
Yeah.
You just like...
That's how it is. I'm doing a job. I have a job to do. I actually really like the job. I like it a lot. I enjoy it.
I like it too.
It can be stressful at times. Nonetheless, incredibly interesting.
I'll
Great
take your
people to
job.
work with. Really important. What more could you want? But that's what it is. And I'm blessed by working with great colleagues who are really committed to getting it right. I mean, fully appreciate how important it is that we get it right, and do everything we possibly can to bring the best thinking, the best analysis, and debate things, over and over until we feel like we're in the right place. At the same time, there is no certainty in this. You can be wrong because the economy can zig when you thought it was going to zag.
So your term as Fed chair ends about a year from now. What do you think about your job security?
I fully intend to serve all of my term.
Excellent. I mean, as we're getting close to wrapping up, I did want to ask something a little bit out of the box. I think because you do have a position of such great responsibility, people are very curious about you, and I think people tend to read into everything a Fed chair does, small gestures, word choice. I know it's part of our jobs in this room to pore over every word you choose. I did want to ask about one thing that I've wondered about for years, which is your tie. You always seem to wear a purple tie, and every time I think I've seen you, you've worn a purple tie, and I'm wondering if there's significance to that?
Well, at the beginning, the only significance was that I like purple ties.
Okay.
But I will say,
It was, he said.
So then the next press conference, I reach for a blue tie or a red tie, and I go, maybe not, And so I wind up wearing purple ties. And then it becomes a thing, and now I definitely wear purple ties all the time.
Oh, he
Okay.
ruined
But
it.
I felt like, it just felt a little awkward to be wearing one that was identified. We are
Open
strictly
poly market.
non-political. I can't stress that enough. We are not.
Open poly market.
It's not that
purple
we're
tie.
bipartisan. We are non-political. We don't do that. And so purple is a good color for that. That's all.
Poly market
Plus, I
bet,
like
purple tie,
ties.
easy win. Easy win.
tie.
Easy money.
Purple
Insider
I have
info.
one other Milwaukee question that I overlooked here, but in Milwaukee and other parts of the country, the housing market is out of whack. In
Out of
our
whack.
market alone, in southeastern
It's whack.
Wisconsin,
Housing
there's
market. whack.
5,000, the market's out of whack by like 5,000 houses that need to be on the market. for
Tariffs, whack.
equilibrium.
Housing market.
And
whack.
a report this week said tariffs could tack on some $6,000 to the cost of building a new home. How long are people going to sit on their cheap mortgages from COVID? Thank you very much. But and
God, their
before
audio.
they move on.
It's all them.
Before the market frees up.
So you have several things there. The first is we just haven't built enough housing, and we haven't
Facts.
kept up with the demand
Facts.
for housing. So there's an
Facts.
underlying shortage.
Big
Before
facts.
the pandemic, there was a real housing shortage. And by the way, that's
What is with this
happening in many
camera angle,
comparable
bro?
democracies
What
around
is
the world.
going on?
The second thing is,
What is this?
lock-in, as you say. There were very, very low mortgage rates during
Locked
COVID,
in.
and people are kind of locked in. It would be very expensive to move, and that'll of course wear off over time. You also mentioned, the costs of materials that might be imported, lumber and nails and things like that. And yeah, and also labor, a lot of labor from in the home building business has been traditionally immigrant labor. So yeah, the sort of new build market, it may face some cost pressures as well. That may very well be the case. That's what we're hearing from home builders, for example, both on the labor side.
Yes,
and the
this is
material
actually
side.
at a parent-teacher
But
conference.
even once these short-term things happen, we're still going to have not enough houses. And so it's all, I think for a long time, we're still going to see upward pressure on housing prices, maybe until population
build
growth
more
slows
houses.
or until we catch up.
Until we all die, maybe.
You mentioned that we're kind of in a period of waiting right now to see how policy ripples out through the economy. How long do you expect that to take? How long do you expect these big policy changes to show up in our day-to-day lives, in prices and supplies and things like that?
I mean, for a while, we didn't know what was coming on April 2. Now we know what came on April 2. We don't know. There's a lot more to be said about how all that shakes out. But we've come through that, and I think you now know that the tariffs are larger than people were generally expecting. That much now at this point. And you'll know more as you start to see the effects on the economy. So, as the months go by, it's hard to say exactly when you'll know. But clearly that learning process is ongoing. We're just seeing that these are new policies, not just the tariff policies, but the other ones as well. There'll be important fiscal legislation coming up fairly soon, and there'll be regulatory changes, significant regulatory changes. You have to really look at all of that to see what the overall effect will be. So I can't give you a date, but all of that is now kind of coming into place at sort of the speed you would expect policy changes to be, and then we'll begin to see the real economic effects as the year goes on. But again, I can't give you a really specific date.
Is the fiscal legislation the tax cuts?
Well, yes. I mean, I know they're contemplating, and again, we don't comment on fiscal policy, but what I read is that they're contemplating, making the Tax Cuts and Jobs Act cuts permanent, and also perhaps some other things as well. We wouldn't be. We have a sort of a placeholder for that too, but that's really not ours to comment on. But that's what I was talking about. Yes.
So
Bitcoin breaking
I have a
out versus
question
stocks.
from a
Spicy.
friend in Milwaukee who said she has clients that have deals ready to go, businesses that are ready to launch from their garage to a private equity deal, and they're just stuck in their garage right now. How long do you think, what do you think the impact of the uncertainty these days will have on the private equity?
The uncertainty.
So again, we're
these
hearing
days,
a lot of
I
that.
like
People are just kind of
that.
waiting waiting for clarity. So,
True.
and I can't tell you when that will pass, but ultimately it will pass. We know that at a certain point we'll know enough to know what the uncertainty will decline, and we'll
Wisconsin.
be able to see with real clarity what
all
the
about
policies
Wisconsin,
are
baby.
and what their effects are. So. You're right. We hear the same thing from businesses and from people that they're kind of waiting and seeing. There's a lot of waiting and seeing going on, including by us, and that just seems like the right thing to do at a time of elevated uncertainty.
Facts. Jerome Powell is
Economic
goated. I don't care what you
indicators
say.
are
He's
you
goated.
watching right now? I mean, very famously, you
Ooh.
look at the CPE and
TA.
obviously the CPI and things like that. But are there any economic indicators in this
Bollinger
moment, in these
Bands,
circumstances that
the
you
Ichimoku
are
cloud.
watching, focused on,
Sure.
interested
Yeah.
in?
So
Moving
the
averages.
basic two big data pools are the data around prices and around employment. And we get in the employment area, we get just really that's an area where we actually get pretty good data. Although the survey response rates have been lower, nonetheless, we get a lot of different data. And it's not just unemployment, it's participation, it's by age group and things like that. It's wages, it's many, many different things. It's jobs, it's quits, all the job creation, quits, openings, all those things. So that's one thing. On inflation, we target PCE, personal consumption expenditure inflation, not CPI, and the two are broadly, they move they move together, but
Actually didn't know that.
25 years ago, the Fed switched to PCE. The public looks at CPI. It's kind of a little bit of a thing, but because we think, it's really just a better way to capture the inflation, the cost pressures that households and businesses feel. We think it's a better measure, and that's what we look at. But they're not that different. I mean, they look at different measures. Ultimately, they're pretty close together. Those things. On growth, you look at what's happening with consumer spending. The economy is overwhelmingly driven by consumer spending. So you look at how are consumer surveys, how are they feeling, how are they spending? Sometimes the surveys are very negative, but they keep spending. That's been happening really for a while. People spent right through the pandemic, and they spent right through this time of higher inflation. They kept spending, and forecasters kept thinking, like us, kept thinking that consumption would slow down. But that's a really critical thing. After that, business investment is a big chunk, and you look at that, and that is also susceptible to sentiment. Businesses, if they don't know what to do, they're not going to do an acquisition, or they're going to hold off on building a factory or a plant or hiring people and things like that. So we look at, I could go on for a long time. We look at a lot of data, and we try to make sense. We also talk to people who are in the real economy. I grew my career was mostly in the private sector, talking to people who ran businesses. And for me, the story doesn't come together until I actually hear from people who are in the economy doing things and what they're feeling and seeing.
I'm
and
in the economy
then it sort of
doing
fits
things,
together.
doing stuff.
This is like via the Beige Book, or
The
just?
Beige Book, thank you for mentioning the Beige Book, and I hope you read it.
I love the Beige Book.
See, that's great. Everyone should read the Beige Book. The Beige Book comes out sort of mid-FOMC cycle, and it's all the 12 reserve banks and all of their incredible contacts, what they're saying about what's going on in the economy. So if you want to know, you can look at the national data, but if you want to know what's going on in regions and at different industries, you look at the Beige Book. So it's really a critical thing. And actually, the reserve bank system that we have is an enormous strength of the Federal Reserve System. We have these 12 reserve banks with their own, economics departments and own participants on the FOMC. So that's a great thing to look at.
I'd like to ask you about another body of work that many of us know that you're familiar with, and that's the Grateful Dead. So,
Okay.
question
Yeah, he
for you,
is a
sir.
deadhead, which is kind of cool.
American Beauty
actually.
or Terrapin Station?
American Beauty.
Dude, this guy's the worst
Not
questions.
even
Get
a
Not even
him,
close.
That was
Ask me a
so
hard-
fast.
get him off
Working
stage.
man-
That's my era. That's
What
my
about
era.
in
Working Man's
Wisconsin?
Dead
Yes.
or Europe 72?
In
Both.
Wisconsin.
Yeah,
come
that's
on.
my era. We're in the same era here. So that's, for me, it's late 60s to mid 70s. So
Touch of Grey, what do you think?
it was their only hit, but it's a good song.
Okay.
Yeah.
We'll have to read it.
Finally,
Are we going to do this?
I feel like you're speaking another language.
there's a well-known Grateful Dead bootlegger who, with I believe the permission of the band, Dick's Picks, who's put
Yeah.
out.
You say Dick's
So
Picks.
what's your recommendation of those?
What's your recommendation of
I
Dick
don't
Picks?
have
Dude,
any
who
Dick
is this
Picks.
guy? Get this
Like I
guy
said,
out of this
my
parent
real
teacher
interest
conference.
was
He doesn't even have a
late
kid. Why is he
60s
here?
to mid 70s.
Yeah.
This is a high school library.
A bunch of times, and I know every note on every song from that era. But since then, I've been busy, actually.
Well, we thank you for taking time out of your schedule to join us here, and we appreciate your work.
Thank you very much. Thanks, everybody.
That guy.
Thanks, Jim.
Who is this guy? Get him out of there. All of his questions were about Wisconsin. Like what? Yeah, I'm not really sure. So the event has concluded. Here's kind of what we can pull from it. Jerome Powell's goated, in my opinion. He's the only man that can remain apolitical in the spotlight. I have mad respect for him. Beige Book. Let's take a look at the Beige Book. I mean, I had heard that terminology, but I can't say I've ever actually read it or looked at it. Apparently, the budgets are in very hard days. You guys heard hissing throughout that entire stream. And yes, those were the snakes in the room. Yes, you could hear the snakes. No, that audio was on their end. And not only was that audio terrible on their end, the video, what was with the angle? I had to crop it because it was just the strangest angle. They had like a podium in the forefront, and then they were sitting in the back. It was very odd. Very low budget. I don't really know what went on there, what the real point of that was, one thing we did get also, though, Jerome, if you read between the lines, Jerome Powell did drop us some boss alpha here on how to make some money. And that is, go to Polymarket and bet on Jerome Powell wearing a purple tie. I don't know if you noticed that. He said he's always going to wear a purple tie now, so that seems like a good bet. If he doesn't wear a purple tie and we lose money, we'll all just sue him, I think. We'll sue him, something like that. That was financial advice, I think. That was odd. That was odd. I was a little flustered. The audio was so bad, it was just like brutal to sit through, man. I was a little flustered. Yeah, I did not actually know that this was going on. I was at the gym and I saw, like, I don't know, something posted it, and it was like Jerome Powell at 11:30. I was like, holy crap, I guess we'll cover that. It's Friday. And we tried. It was a little janky. We have an FOMC in May, so we're a little bit far away here. And today is not disappointing on the charts. Holy shizzle, my friends. S&P 500 down to 5,000, or the SPX down to 5,120. That's going to be what, another 3%er? Let's get these bar change values back up here. 3%er? 4%er? Dang, another 4% day already. Is that already? Yeah, yesterday came in at 4.1. Today at 4.1. Actually, the exact same change as the day before, leaving some big old gaps behind us. We might look to some higher time frames here. I don't know how my audio is. The mic has been so goofed up since the NVIDIA drivers. Don't update your NVIDIA drivers. Don't do it. Don't update them. Bigger time frames, things could look a little bit better here on the monthly. We see back in March and April of 24, we have resistance at an all-time high. We've traded higher. We could be looking for a back test of resistance as support here. That's going to come down to how the monthly candle closes. Closing above about 5,200. Going to make this candle not so bad. Where we are in the retracement at the moment, all the way down to 786, not really the best, place to be. Stocks, the one thing here, all right, I'm getting off track. The one thing here that I did like about Jerome, about Mr. Powell, he always just keeps it straight. So he said, around kind of political stuff, he said, I think largely people and markets are just looking for clarity. They're waiting for clarity. And that hit with me. That resonated. There has been not a ton of certainty over the last month or two. The only certainty we had really was that things were uncertain and that tomorrow, who knows what tomorrow could hold. Yesterday we saw, was it yesterday? I can't even keep up now. The U.S. tariffs on almost every country in the world. I won't even get into the numbers there. That was a little odd. They were based on trade deficits, not tariffs. So we're effectively tariffing other countries, sometimes 10x more than they're tariffing us. But that's neither here nor there. I said something on Monday about tariffs do have an upper end of uncertainty. And so what I like about the kind of flat out everyone tariff thing is that is approaching, if not the upper end of this. Once everyone is tariffed, there is no more room to tariff new people. It's kind of like a hard limit in a way. And so hopefully markets start digesting that and we start seeing some kind of fall back to consistency, fall back to certainty, or at least just some of the uncertainty clear. Now, with this being said, I know I'm being ADD AF today. We do have some good news. Here's what I like about this whole thing happening right now. I know there's a lot to kind of focus on the negative side. Crypto has been down. It has been boring. Alts have been taking beatings. Stocks are down. NVIDIA's down. There's a lot of stuff that's down, minus gold. The kind of silver lining, Bitcoin holding sideways here while we see, let's say, the S&P fall, major stocks fall, and while that itself doesn't feel good, if we turn to this chart, Bitcoin versus the S&P, the valuation of Bitcoin versus basically, let's just say stocks, right? Today, on this sell-off, it looks like it started yesterday, but on this sell-off today, we see Bitcoin very realistically breaking out against stocks. I wish the USD chart looked like this. We're seeing higher highs. We're seeing a return to mid-February here. When we look at the moving averages, if I could find the moving averages on this chart. When we look at our moving averages on the day, we see that same death cross that we're watching on Bitcoin spot and that we've seen on many altcoin charts already. We see that death cross potentially being invalidated and setting up for a much more bullish scenario here. That 50 daily moving average, as long as we trade above it, we are going to see it continue to curl up, and we are going to see potentially a bullish kissing of these moving averages in place of that death cross. That would be, in my opinion, a very, very hopium bullish outcome. But this is keeping me going, my friends. I'm enjoying this a lot. We're going to be keeping our eyes on this because what else have we got except for looking to the downside? Even on Market Cipher B, I'm really hoping this starts playing out into the Bitcoin USD chart. On our oscillators here, man, you see momentum kicking back up, VWAP up, money flow trending back to that zero line, making higher lows. This is all of the things that I want to see on the day. Combine that with above the 200, above the 50. These are all the things that I want to see on Bitcoin spot. We're seeing them on Bitcoin versus the SPX. So hopefully that transfers over here over the next, I don't know, let's hope the next few weeks. Bands will definitely make her dance. Unfortunately, on spot, we are still in that same crappy position, but it's funny how perspective can play such a big role here. While we trade sideways and everything else bleeds, Bitcoin is showing relative strength in the market at a very unexpected time, in the sense of because everything has started to fall and Bitcoin has been falling and going sideways and sentiment is at lows. This is relative strength. This is the hopium you are looking for. This is the hopium I'm looking for. We don't quite, or maybe we are, slowly getting that Bitcoin versus stocks rollover signals that we just looked at, but it isn't quite there yet on the day. A weekend rally could change that. A weekend rally. Perhaps even a rally to our death cross here. Let's see if that's still on time. We were looking about April 7th. What is it today? The 5th? Still slated for the 7th, roughly. Give or take, I'll say give or take a day, maybe give or take 24 hours. We're going to see this death cross happen. We went over them largely already. If you haven't seen that, I would go back to the channel, go to the live streams, and look for the one about death crosses. Basically, we concluded that they don't tend to live up to their name, really in any scenario. They are often bearish, but they do seem, at least in Bitcoin's history, to be largely trend dependent. So when we are in an uptrend, as we are still on Bitcoin, we've seen this once a year, every year since the bottom, they don't tend to actually result in much more downside. And even more so, they tend to mark bottoms. In the last two iterations, we have seen our lows come in before the death cross, and we never traded back down to those levels before rallying higher. So I'm keeping optimistic here. This is not a big move in price. 5% back to the 50 daily. Certainly do not like this. What was this? Wednesday's candle. Do not like the rejection from the 50 back below the 200 here. But holding the lows, roughly for now, things are still okay. Don't want to fool you. This chart is still ugly, but it only takes about a 5% move for this to look much, much better. Much, much better. Death Cross. Death Cross. Yeah, Death Cross is my supervillain name. We decided that many years ago. Hope you guys catch that 20. Same. XRP GOAT. What's funny is you don't even follow trading, but your friend does every time. Honestly, VZ Fat Cat, we love talking about trading. We love talking about charts here. At the end of the day, though, you know it. I am a total advocate of DCA, chill, live your life. I have chosen a very different path from that. I'm not sure, honestly. I might have just been better off if I just DCA'd, like, more, ignored trading. Yeah, at least would be better off mentally. My mental health will be better. But it is hard to beat DCAing Bitcoin. Just regular buys, brainless, stressless. it's hard to beat it, man. I'm a huge advocate. In fact, I would say I don't believe there is a successful approach to crypto long term that does not involve some level of DCAing Bitcoin. I really have never seen it. There's probably some examples, some outliers, but like we're talking for every 100 people, one, right? 100 people don't DCA Bitcoin. One of them makes it longer term. And I might be generous. Death metal band, Death Cross. Yeah. Bitcoin dominance, bear div weekly, random stuff. Well, dominance is a great chart to look at. Let's take a peek here. Dominance is correlation. Damn, we're getting a little bit excited earlier in the week with the Bitcoin dominance and Bitcoin USD correlation. We were seeing both of them rally at the same time. And that was very reminiscent of, let's say, the entire run we have seen since the bottom in 22. Bitcoin dominance has moved up and Bitcoin USD has moved up. We saw that kind of invert here on February 3rd during the sell-off. Dominance spiked to new cycle highs. Bitcoin fell off. And since then, I think we have been painting a very bullish pattern on the day. Our lows have been coming up. We've tested resistance up here at like 62%. We just broke out this week. We have a little red candle here on the day. Little red candle. I ain't too worried. I'm not too worried about that. You asked about bear div on the week. Well, I'll even one up you here. It looks like you got some bear div on the day, right? Boom, right here, highest point of RSI that we can see, not the highest point of price or of dominance on the chart. And we can see that those highs actually have been coming down, been coming down. So we might even have bear div on the day. Maybe we should zoom out though. How long maybe have we had bear div on the day? Or has that been common in this run? And I don't know the answer, so let's take a look. From the bottom, September 22, all the way to today, we see the highest point in RSI right here in June of 2023. And since then, we have painted only lower highs on the day relative to June. There were some times where actually, this is kind of interesting here, a little nerdy. There were occasions even where we painted bearish divergence on our highs again, even though we had higher highs in RSI. We have a lower high here, higher high in RSI, but virtually every single high that we have seen since June, we have had bear div on the day on that high. So that's a good foundation to build from to look at the week. So what's the week doing? Let's look at that same point in price, June 23. We can see here that was where the RSI on the day topped out in June of 2023. We did have a higher high and a higher high in RSI into October of 23. But since then, we have been putting in higher highs and we have been seeing lower highs on RSI. So am I saying that bearish divergence on the weekly and daily doesn't matter? No, that would be against really just the ethos of trading. We have to factor these things in, right? If you take a look at the free playlist on this channel, you'll find often, and especially in the more recent videos, we comment on this is not something that you want to view in a bubble. And that's going to be the same with divergence. You don't want to view really any chart just through that lens. You want to view what's there and then see what lines up. So if you are seeing some other bearish signals, which I'm not going to lie, I don't, other than oscillator highs, and honestly, maybe correlation with Bitcoin USD coming down, kind of like as of this point, as of February, that could maybe be some confluence. Viewing it through that lens of confluence of multiple factors suggesting the same thing is the better way to go. If you're looking at the candles here, I just am not ready. I'm not ready to get bearish on this. Like at this point, I don't care what signals, what happens, as long as we're above about 60% dominant, 61%, I don't, this chart is bullish as hell, man. You had a high, you retraced, higher low, higher high, higher low, now you're moving back up. You're in an uptrend. If you break this low, we can start talking about it. But I know if you're looking at it, multiple people are. There are other people thinking dominance. I see the bear div. I'm sure some YouTuber is making videos about it. Dominant alt season. You're probably not alone. It's a good thing to look at. But we can see in the history, we've dealt with this both on the day and week for months. And for us to just now say, oh, well, there's bear div, it has to go down, doesn't really make sense, because we would have made that same assumption every move on the way up. I actually have one more thing, and this is a surprise. I did not expect this. The seat is uncomfortable today. Maybe it's the shirt. I didn't expect this. A little bonus alpha here. Let me sit up straight. On the month. Here we go. Maybe this is where we'll look, right? Maybe on the month. From 22 up, the month, reflecting much more what we have seen in price, matching up with price much more than those lower time frames here. Looking back to 22, we see just higher highs. And in fact, even today, or even today, last month, whatever, we have a higher high in RSI with a higher high in price. So the monthly actually is not giving us bearish divergence yet, which is an interesting factor that I have not really heard anyone talk about. The monthly also is not necessarily giving us bullish divergence. It's just giving us nothing. When you have neither bullish nor bearish divergence, you're just in a trend, right? You're not really using that as evidence either way. I would say if we do begin to see bear div on the month for dominance, that's going to be a big sign, largely because we just have not seen it on the way up, and we did see it on the day and week. So that could be an interesting sign for alt season. To be determined. We'll find out. That was a cool little tunnel, little rabbit hole. The dollar has fallen farther. Son of a bitch. The dollar faked me out, man. I feel so betrayed. I thought we had a good bounce there, man. Dude, trading is so hard in this year. Everything's shit. Dollar blew past the order block, top support, but now, I guess on this low, I did say it. I was like, every single time I take a position on the dollar, it goes the other way. Every single time. Just counter trade me on the dollar, man. Just anytime I talk about it, just do the opposite, and you're probably going to be hitting W's. We do see, though, the dollar has filled that order block and found some support here at 1013. This is it. This is really it. This is how I view it. If the dollar doesn't bounce from 1013, the bottom of these yearly candles on this order block, it's destined for lower. It's looking to retest 23's low and potentially even line up back to, say, like 2021. Is it 21? 21? Wow, I can't believe 21 was 4 years ago. All the way down here, maybe the 90s or 89. You lose support here at 101. I think you're looking for like a 10% move. Jeez, this thing gets me every time. Let's get rid of that. Yikes. Yikes. What do we got going on here? Bitcoin's still in the same fucking range. I don't love this. I don't love this. On the hourly, I do not like how much we're testing. You can kind of just draw this line with your imagination here around 81.4-ish. We have tested this as support over and over and over again. I do not like it. I do not like it. It is beginning to look like some kind of flat top pattern. Well, flat bottom pattern. Right? Let me see. How would I even draw this? Let me see. Something like that. These lows don't work well with it, but the idea is there. Each time you test this resistance, it looks like kind of, maybe we got like one fake out. Each time we test this resistance, or the support, sorry, it is weakened. In the next test, it becomes more probable to break downward. This was largely the same thing we were looking for earlier in March, right here, for a break to the upside. We had resistance being tested. We have a flat top. We saw it break to the upside. Of course, it didn't really bring us very far, but same pattern. I don't like that we're seeing this paint. I can't believe we're just still at the same price, man. We hit roughly this price, like within 5%. We hit this price back February 24th. Here we are in April, and we're still here, and we really haven't gone very far. Only about 10% down from the low in February is significant. About 10%. Also, I want to look at today. Trump coin. Trump coin. Great. Trump coin fell to new lows on centralized exchanges yesterday, down to $8.73. Guys, I don't know. I hope you're not buying that. I don't know. If you're buying at this point, then there's no point of even saying anything to you. Not a lot of other alerts. This is what I wanted to look at. One more time. This is the hopium chart for today. Bitcoin versus the S&P breaking out. I'm going to tweet this then. Breaking out. And man, look at even this. Okay. After back testing March's high, we were looking for this potentially earlier, what, in February, March? 1, 2, 3. I don't know, man. This looks pretty nice. This looks pretty nice. Oh, man. There we go. Back above the previous all-time high. This doesn't look bad. This doesn't look bad. With the death cross coming, like, I like this. It is Friday. Stocks will stop trading. Bitcoin will continue trading into the weekend. This could get mixed up. We are back at the 618. Not that you could really long this, though maybe someone could find this pair. Not that you could really long this, but we are back to the 618. Would not be a crazy move to see this return to the 200, maybe even back to the 50, about 300 mil in this pair for support again. Wouldn't be crazy. This is looking way more bullish. What's up, David Brum? What's up, Verhoofdy? What's up, Performance Freak? Cash was backed by something like gold. It wouldn't be better. It still wouldn't be better than Bitcoin. Well, I mean, cash used to be backed by gold. I don't think that ever made it better. I mean, Tether is backed. Tether is probably backed by gold. A lot of gold. Not pegged to gold, but like, I don't know. I think Tether's better than the dollar, too. What do we got? Shit's on sale. That is for true. What's up, Moggy? Good to see you, Moggy. Cheers. CBK. King Peasant. Hookah Fish. Cheap Vlog. New Range. Yeah. What's up, Leedy? Who else is here? Stevie. I'm going to go visit Steve this summer. Steve, shout out to opticalart.com. Shout out to my man, Steve. We're going to chill at the beach this summer. Let me throw his channel up. Optical Art. Go subscribe to him. This man is the Lord of the Rings. He's a great analyst, a good friend of mine. Check him out. Optical Art. What's up, Leveler? Learning with Aaron. Has the Fed spoken? You are late. Yes, it's already over. It's kind of a nothing burger anyway. What's up, Jose? How you doing, man? Chirpow won. Narrow margin on our poll today. Well done. Temporary. What's temporary, Michael? Picanzo. What's temporary? What's he gonna do? Hold on, let me play the Chirpow song.
Chairman Powell, money machine going brr. Chairman Powell, he ain't playing, this a blur. Gotta follow the data, ain't no time to air. Watch him speak now with that Tom Crown flair. Yeah, Chairman, he's the captain of the crew. Navigating through the markets, knowing what to do. Federal Reserve's in control, making moves. Keeping that money flowing so the economy can groove. Chairman Powell, making paper every hour. Chairman Powell, he got that money power. Data on his side, watch him rise and devour. Yeah, he's the chairman of the board, making moves that empower.
Oh, man. Ethereum certainly looks like shit, doesn't it? Oh, my. Still, I don't believe Ethereum has reached its bottom against Bitcoin. On the USD pair, retesting support down here on Ethereum at 1800 again. Lower high. Just statistically, looking at this chart, I think you bet down. I wouldn't necessarily want to short right here at support, even if I believe it's going to break. Probably look for some kind of relief bounce, but man, Ethereum, you do not look good, dude. You look not good. Somebody get an ambulance for Ethereum. What about XRP? For our XRP heads out there, I know people tune in every single day just for XRP. XRP failing to find the higher low support really that we were praying for. On Tuesday, rejected from 225, right back to support at 196. I don't like this. I don't like 196 being tested again. You had your high at 224. So basically, for now, in a range between 224 and 196. Likely to see maybe a trade sideways here. But the more you test 196, just like I was saying with Ethereum, the more likely you are to break down and seek support below. Not looking the best. I mean, a little bit daily on XRP looks a little bit better than actually some other things. Yeah. Got a little bull div on your RSI. Money flow's coming up. VWAP at the 0 line. Momentum pinching. It actually seems a little bit ahead of Bitcoin here. Maybe it is looking at least to retest 225 in the shorter term. Has anything else moved? Anything else moved? 𝐂𝐴𝐾oin. Oh man. Like I said, guys, if you mined Pi, you had a bunch of Pi. I said, all right, take some profits. Congrats. But I warned you, probably not a good idea to buy. Probably not. 𝐂𝐴𝐾oin failing to hold its only daily support, seeking lower, now essentially in price discovery. Really never traded at these lows. Yes, you have a candle here, but this is the initial listing day candle. And yeah, that's not to be trusted. We can look downward. At this point, really all we can do with Pi is say, okay, 50 cents, psychological support. You could see a bounce there, but I would be aware or looking at 71 cents here. If price returns to 71 cents, I probably would look to close along. We can go down farther and say we have our 618 down here, 36.8. And then basically back to, we have 25 cents as a psychological, 20 cents, maybe 10 cents, 15 cents, etc. We don't have any real support here. And I'm no expert on the tokenomics, but I assume this is just going to continue to see unlocks. Yeesh. Hopefully you guys took some profit. Remember, you don't have to be all in or all out. You can always take just a little bit of profit. Just take a little of that risk off the table. Lock in a little bit. And that is really a very winning strategy in this space. I can't even put a trend line here. It just looks bad. Just looks bad. Let me see. You should go to joincrowncrypto.com today. This is our new group. Now, it's not for everybody, but it is for those looking to succeed in this space, looking for more personal, intimate help. We have exclusive live streams, analysis, trade setup, signals. You can get a free week trial if you sign up using joincrowncrypto.com. You can use promo code VIP to get 50% off forever. Anyone who signs up for a year, for the year, I know it's a little chunk of change, but if you sign up for a year, I will pledge to do some amount, maybe quarterly, kind of little meets with anyone who signs up for a year. That's limited time offer, though. I can't do infinite. After this stream, but since we streamed early, I'll have a little bit of time. At 3 p.m. East, I will be doing an exclusive stream in there, which is mostly going to be trading, Q&A, chatting. A lot of value in there. A lot of value in that group. It's not for everyone, I admit. I don't hate you if you don't sign up. Don't worry, guys. No judgments. Like I said, not for everybody, but looking for those who really are focused and determined to succeed in this space. Joincrowncrypto.com. That's it. That's it. Selling out to buy XRP right now? Dude, that just seems like Crown OnlyFans. Kinda, except, but no pictures. Hey, it ain't far. Being a streamer is a lot like being on OnlyFans. What about SCI, Cardano? Dude, nothing is doing anything. Nothing is doing anything. Scam coin, probably. Hey, at least it was less of a scam than a lot of stuff. Honestly, I'll give Pi that. Less of a scam than many other things that were just rugs. At least Pi, most of the people didn't pay anything except for their time and watching ads. Bitcoin into Friday, man. Let's see. Let's take a look at this week. I know we already did, but pretty ugly weekly candle. If we don't get some kind of rally over the weekend. 80.7. We actually at the beginning of this week looked at 80.7 and said probably not a bad place to look for a long. Fill this weekly candle here with price. Pray that your low holds and aim upwards to like resistance 91, 92, maybe yearly open kind of 93ish area. I think that's not a bad trade. If we get a close down this weekend below weekly support or below our weekly even our weekly open, probably aiming for that 80.7. All right, anyway, this has been a Chirpowish day, Chirpowish stream. If you guys haven't subscribed, please do. We are live here Monday, Wednesday, Friday, and often days in between whenever it gets very spicy. If you haven't hit the likes yet, hit that like button. Check out the free playlist. Like, we have a premium group now, but we also have a completely free playlist on YouTube. It's just on a channel in the playlist. Get in there, watch them. There's like dozens of episodes. They're premium. It's my gift to you. Maybe a little homework over the weekend. Anyway, I hope you guys had a great Friday. I hope you have a great weekend coming up. It's beautiful out in a lot of places. I know it is here. Enjoy the weather. The charts will be here. And know that Bitcoin and crypto largely, for some reason, just end up doing nothing when it's nice out. So go enjoy it. Get your minds off the charts. Come back. I promise it'll be here.